Hello there, Salim Omar here from CPA Marketing Genius podcast, bringing you another amazing expert to talk to us about a topic that is becoming more and more important and relevant to accountants, and that's cash flow. His name is David Safir. David, welcome.
Thank you, Salim. It's a real pleasure to be here with you today.
I'm looking forward to this. David is a globally recognized expert in cash flow maximization. He's the founder of Cash is Clear learning systems, and he works with businesses, accountants, and teaching them how to grow their revenues with cash flow advisory services through his cash flow advisory certification programs and mastermind groups. He's a contributor to CFO.com and a contributing author to CFO University. He's been quoted in hundreds of news stories, spoken to audiences internationally, and appeared on dozens of podcasts and various television outlets. So, David, you are the guru when it comes to cash flow management. How did you get into cash flow? Have you always been doing it? Give us a little bit about your backstory.
I'd love to. It goes way, way back. When I was in college, I worked for my father, and he owned a company and they were in trouble. And he showed me his one-page spreadsheet. This is back in the days, you've got to have some years behind you to remember Lotus 123 or SuperCalc.
Yeah.
And they were in trouble, but they had a one-page cash flow model that they could show the bank when money was coming in, what expenses were planned to go out, and what the bottom line was every single week. And they updated it daily. Well, that's what I grew up with. I thought everybody did this. Fast forward 20, 30 years, and I'd been doing general consulting. And I said, what is the one thing that everybody has in common? And I realized, they all have cash flow issues. So I started looking around, what resources are available? And it always came down to articles with 5 to 10, maybe 15 things. And the last one that you could do to impact your cash flow was buy their product or service. Said, this is crazy. I can probably think of 99 ways to impact cash flow. I got to 99, kept going. I'm at 195. I started writing articles. I started putting together coursework because I realized so many companies have cash flow issues. That's why they're failing, even if they are profitable, according to their accounting reports.
Got it. So cash flow is key even for companies that are profitable. And is this relevant for companies that are doing well from a cash standpoint, like they're profitable and they've got decent cash? Are there ways to make it better?
Well, the question is, what is decent cash? We learned at COVID, when COVID hit, a global pandemic, it was a shared global experience, that if the government had not stepped in and provided huge subsidies, a lot more companies would have failed. They were unprepared for business interruption. So the answer is yes. And there's only two types of companies, as far as I'm concerned, who have cash flow issues. Ones that have declining revenue, and the other ones are that have increasing revenue. As a matter of fact, you can get into cash flow issues and problems faster if your revenue is growing than if your revenue is declining.
Interesting. So you worked with small businesses, and are cash flow improvement strategies different for the small business compared to the larger business?
They are. When we're talking, well, let's first of all define what a small business is. For the U.S. government, a small business is 500 employees or less. For me, I'm thinking 20 to $50 million or below in revenue. And why there? Because at some point you pick up a controller, accounts receivable, accounts payable, and all of a sudden you have staff who can start paying a lot more attention to a lot of different aspects of cash flow. The key differentiator, though, between big companies, well, that's the big differentiator, is the staff. Our universities train people to be Treasury Department employees. I just mentioned accounts receivable, accounts payable, but also the general treasury function to interface with banks. When you get to a small company, you've got one or two generalists who don't know all these details and they haven't been exposed. As a matter of fact, Your average CPA has not been exposed to anything revolving around cash they didn't learn back in college. And that was so they could become an employee of a large corporation.
Right. So what are like some of the things, how do you help a company that's struggling with cash flow? What are some of the things beyond the stuff that I'm a CPA, listeners are CPAs, and we're working with them and with numbers and looking at their financials and so forth. What else can we be doing? Give us some insights there.
Let me give you a quick framework. First of all, it all starts with good bookkeeping. If you don't have good bookkeeping, then you really can't do anything to project your future. Once you've got that, though, number one is mindset. It's a different mindset. Number two is modeling your cash flow. Three, manage your cash flow. And then start to mentor the people that you're working with and finally learn how to maximize it. But let me go back to the biggest issue is mindset. As CPAs, we are trained to look backwards. Well, I say we. I took accounting courses. I'm not a CPA. But in accounting, we're saying, well, what happened yesterday? What happened last minute?
Right.
What's our current bank account? We are not trained to take those numbers and project out the future, let alone trained to try to create the future that we're looking for. We are fairly reactive. We take bank statements. We want to document. So when you're trying to do cash flow and you're trying to do cash flow management, you need creativity. You're not allowed to be creative when it comes to GAAP. They've already told you what the rules are. You need to think outside the box. Matter of fact, you break the box up completely and you learn how to work with all the different areas of the business, not just finance. So the mindset is a huge issue that I work with the businesses, the CPAs. Quick story about our mastermind this morning. We simply looked at reports at cash basis reports versus accrual basis reports. We, as accountants, automatically, well, it's accrual based accounting. That's what the standard is. Yeah, but this was a fruit wholesaler that the accrual based accounting said he had $1.6 million in inventory, which is 3 months, versus the cash basis accounting said he had $560,000 in inventory, which is 3 weeks. And you go, yeah, fruit doesn't hang out for 3 months. And the reality is he is closer. So all of a sudden we start going, there's a problem with accrual, but from a cash basis, we have a lot more confidence thinking that, all right, he's got $500,000 in inventory to work with. So these are some of the barriers that need to be broken down before you can even start moving forward.
So mindset number one. What's the next one?
Next one is modeling. So modeling, take a holistic look over a time period. Now, I understand that a P&L is for a period of time, but it's still a snapshot of generally one period of time. And what we're trying to do, say week to week to week to week, what's your beginning balance? What are your income? What's your expenses? And what's the resulting future balance a week from today? And then 2 weeks and 3 weeks, and you go out 13 weeks. Why do you do that? So you can see problems coming. All too often, our clients don't have visibility. They manage by bank account out a week or two, and they've got balloon payments. They've got taxes, which is a type of balloon payment. They've got other things that are happening. They've got seasonality in the business, and they're going to get hit with a negative cash situation. And if you've got 2 or 3 months, you can do something proactively. You've got 1 or 2 weeks and you're taking knee-jerk reactions. And that's where people make really big mistakes when they have to react quickly. So that's modeling is the number 2.
Great. Good. What comes after that?
Well, then what I call mentoring, you look at the business and you say, okay, let's look at the different departments, sales, operations, marketing, because there's certain things you can do within finance. And mentoring the finance group, accounts receivable comes to mind. But once you fix it, it's fixed. It doesn't keep generating benefit versus the sales department. If you can work with them and say, let's do a product analysis. Which products are making money? Which products are losing money? Should we get rid of those loser products? The same thing with clients. Do we get rid of our loser clients, and I'm putting loser in air quotes because they're not bad people, they're just unprofitable clients that maybe they should be eliminated from our portfolio or turned into profitable clients. That's where you can make infrastructure changes that drastically impacts your ability to generate cash for the company, is by looking in the different areas of the business outside of the finance department.
Hmm. Wow,
So
love
mentoring
that.
is next.
Yeah, I love how you look, it's really looking at so many different areas as it relates to cash. Like
Absolutely. Purchasing is another one. When's the last time you shopped for a purchasing department? I saved a business $64,000 a year, not once, but ongoing, by switching them to a specialty supplier of nuts and bolts. We cut their expense by down to 10% of the original expense because they were buying from just a normal distributor, basically paying retail for nuts and bolts. And it's not a one-time win. It's every single week, $64,000 a year, which was twice as much as they paid me for my fee for the entire consulting opportunity. But they were going to get that, $1,500 a week or so benefit as
mm,
long as they stayed in business.
that's great. What's next after that? I don't know if you covered all the points
Yeah,
from.
it's maximization. So when you're mentoring, you're working with the people because this is really a people issue. Then you say, okay, what do we want to do to maximize our cash flow? And I just gave you an example. Let's look at the purchasing department. Sometimes maximization is counterintuitive. I'll give you an example. Sometimes you negotiate a price, best price possible. And if you've got the cash and say, oh, okay, that's $15,000. If I paid you up front or a 50% deposit and the balance, as soon as it's done, you don't have to invoice me, right? It lowers the risk. Would you give me a better price? And all of a sudden, the best price goes down another 10 or 15%. That's completely counterintuitive to pay early or upfront versus what's traditional wisdom. Traditional wisdom is push your payables out as far as you can, which could be it might be a great thing to do. 0% interest for a year or two or three or four is a great way to go if you can get it. But the other thing is, pull in all your receivables, collect your money as quickly as possible. Well, have you ever watched a late night TV commercial where they're selling something and you can either pay $100 or you can make 3 easy payments
Right.
of 33, well, what is it, $43 a month. And you go, wow, for a lot of people making 3 easy payments, it's an extra 10, 15, 20%. But a lot of people go for that option. So if your business can afford that,
Mm,
then why not offer it? Or here's another one: get your cake and eat it too. Third-party finance companies that can finance the purchase. You get paid right away, but
mm,
your customer gets a long time to pay. And there's
mm,
specialty companies that do specialty financing.
right.
So those are all creative things to maximize cash flow. But this takes a stable company, a company that's already got their cash flow model in place and can see the impacts of
Mm,
doing good stuff and being proactive and learning how to maximize their cash flow.
mm, that's great. Now, you work with accountants. How are you helping them? How do you teach accountants to help their clients with cash flow issues? How are you, transferring that knowledge base that you've accumulated over so many years?
It's a great question. So there's two things we do. So I've got one program. It's a cash flow advisory certification program that's in two key parts. One is online education, videos, downloadable worksheets, etc. But the other key part is we have weekly masterminds. Right now there's two. And the first thing we do every single mastermind is say, okay, what questions do you have? What issues are you facing with your clients? And let's answer them here and now so
Mm,
they can learn as they go And the one thing I tell them is I said, the day you enroll is the day you start telling people you can do this because
Mhm.
you've got me backing you up. We're meeting every week. So far, they haven't brought me anything that I either haven't seen before or was very close to a parallel. But that's the biggest way we transfer knowledge is through weekly masterminds and discussions. And I've also offered, hey, you need me, I'll work with you on a client. Nobody's taken me up on that yet because they're learning enough through the masterminds and are able to absorb the knowledge that I'm giving them that way.
Yeah, yeah. And are you seeing accountants offer this as an additional service to their existing client base? And how much are they
Yes.
typically charging for it? Do you know?
That's a great question. I start at $3,000 a month for my services, and it, we end up doing an agreement, and it's an arrangement of prepackaged. The accountants that I'm work with generally, and I start out at lower price points, but the minimum somebody is charged is $1,000 a month. With the intention is they really learn, they're going to charge more. Matter of fact, what we call it is they're being paid to learn,
Mm,
right? Because we learn a lot from the first couple of clients, that our systems down, and then you get more and more confidence. You can charge more and get your fees to where they should be. Does that answer the question fully?
yeah, 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 yeah. I mean, it's definitely, moving away from compliance, or it's really, building on compliance, right? I mean, you said earlier on bookkeeping and all the financial stuff, right? It's all
Mhm.
necessary. It plays a part, knowing the history, there is a lot of value, in my opinion, that comes from it, but it's really using that as the stepping stone and saying, all right, what does the future hold with the modeling and building the cash flow
It
from that?
does. If I can just talk to that for a minute, you need to understand your spending patterns as well as your selling patterns. Most businesses, for example, have seasonal sales, so you can't do a flat line sales projection. That all comes into the business modeling. So this is one of the reasons that the bookkeeping is so critical. And when I say bookkeeping, I mean the accounting also, the journal entries, et cetera, that it's, non-standard bookkeeping as well.
Right. I mean, it's a good segue to my next question is how to build a winning accounting firm. So I'd love to get your perspective on that.
So, you go into the nuts and bolts internal workings of the accounting firm. I don't look at that. What I'm looking at is what can the accounting firm do to differentiate themselves in the marketplace? And certainly offering in general advisory services. More and more companies are doing that, but cash flow advisory. And let me tell you, the feedback I'm getting from the accountants I work with are basically saying 70 to 80% of their clients have cash flow issues. They don't call them cash flow all the time, but it's a huge percentage of the marketplace. If you can focus in on a niche like that and get a reputation for a niche and get a reputation for actually helping companies, not just with the financials, but in other areas to become a trusted advisor, to me, that's the way to build a really winning CPA practice.
Mm, yeah, yeah, yeah. Agreed. It's interesting. I mean, cash flow management, one would think of that as, it's only for companies that have a problem with cash flow, and that's when they're looking for that help. But it's beyond that. It's really building a successful business. And one of the things we're focusing on heavily is the movement of cash, the flow of cash.
It is. So if somebody has enough cash, well, then what are you doing with it? Is it sitting in the bank every night? If you've got $500,000, well, it used to be $250,000. You put it in the right bank account and they'll sweep it every night. And it's in a checking account, but they'll pay you interest every single night that they can use that money at the right bank. Or should you be investing it into additional inventory? What are the opportunities? Should you be prepaying expenses? Imagine going to one of your suppliers and say, listen, we want different terms. Will you give us a discount if we pay you when you deliver? And get rid of the 30 days, right? That's
Right,
standard. We want to be a preferred account. We'll
right.
pay you up front because we've got enough cash to do it with. And some of
Mm,
them will say, no, we won't give you a discount. But what if some of them said, yes, we'll lower your pricing 2%, 5%? All this drops right to the bottom line. And
Right.
there's so many opportunities to do this if you've got the cash.
Yeah. You just demonstrated your mindset surrounding cash with that example you just gave. You
Did
found
I?
you found that opportunity to make the business more profitable by using that excess cash.
Yeah. And so here's part of it. I mean, then you could start getting into interest arbitrage. If you can borrow at 6% or 7% a year, I don't know, but let's just say 6% a year, but they'll give you a 2% discount for paying 30 days early. That's equivalent to 24% a year. You could borrow the money to pay it early if you didn't want to get rid of your cash hoard. So you don't have to be a big business to do this, and you don't have to be a financial genius. Any CPA who can do basic arithmetic, it's addition, subtraction, multiplication, and once in a while division, can work with these numbers.
Mm, that's awesome. David, what's the best way for folks to reach out to you?
There's a couple of ways. My email is pretty easy. And if you've got show notes, hopefully it'll be there. But it's david@davidsafir.com, or call me. I'm in the United States, so it's country code 1-801-510-3566. Nobody's ever taken me up on the offer. I'm still waiting for the first person to just call and say, hey, listen, I heard you talking with Salim and I just wanted to say hi. That'd be great.
Yeah,
So either way, it would be great for them to get a hold of me.
great. And you've got an amazing website as well that has more. And I was on it, as part of, preparing for our call. Should we put that in the show notes as well?
Please do, because that's another way. There's actually, you can sign up for schedule some time with me. A couple of people this week, accountants, one from Canada, one from England, just schedule some time with me that we'll get together and we'll talk. I am looking constantly, whether or not people want to work with me, I'm trying to spread this message. There's too many good companies out there failing because of cash flow issues. And when I say good companies, I'm talking traditional measurement of profitability. And there's the CPAs are the best positioned. And we'll talk about chartered accountants outside the US, best positioned to help these companies because they're trusted. So that's my mission, is to keep more good businesses in business.
That's awesome. David, this was so good. I really appreciate you taking the time to share with my audience strategies relating to cash flow. Thank you.
Thank you, Salim. It was a pleasure.
You take care. Bye-bye.